sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up guys, hope everyone is doing well. In today's video I'm going to be going over some rather thorough and extensive analysis for Bitcoin, and then I will jump into going over Cardano, the total crypto market cap, the SPX, and then lastly Ethereum, where I will then try to tie all this in together to kind of paint one broad picture connecting the fiat markets, stock indices, etc. to Bitcoin and the broader cryptocurrency market. But nonetheless, to go and get things started here for Bitcoin, I'm going to have to preface this analysis with going over my phase cycle theory, so I've gone over a number of times in the past videos of this channel. But what we see here is a yellow box, a green box, and a blue box. The yellow box is the first cycle, the green box is the second cycle, the blue box is the third cycle. Each cycle has two phases within it. I'm going to highlight in pink the first phase. What we see here is a W pattern, a double bottom right here. We made this double bottom along this ascending black, this dash, this black trend zone of support. So we made this double bottom, we come up, we have this kind of slight retest, then we head into an ABCD or a lightning bolt type pattern, if you want to think about it as some sort of analogy, to the ending of phase one. The phase one lasted from the high around $32 June 2011 to the high 2013 around $1,200. That's phase one, and then this broad curve, almost like shaped like a valley from peak to peak, that is phase two. So those are the two aspects, the two phases of a cycle. You can break it down into three as well, where we see basically double bottom being one, we begin our ABCD or a lightning bolt, and then we have phase three right here being the actual valley, what was prior to this, phase two. So W, phase one, phase two is the lightning bolt or the ABC, and then phase three is the valley. But for simplicity purposes, I'm just going to go about this video using the phase two breakdown because it's, as I said, simpler. But phase or cycle three, the blue box, we can see we have our double bottom coming down, bottom out on the same. We see a dashed black trend zone of support here. Again, I want to really put a lot of emphasis on this trend line range that I'm pointing out in this video. We can see right here highlighting as the entire cycle's support. Right here, according to my projections, if I end up being correct, it's going to do the exact same thing. And not only are they, obviously, as I highlighted there, they are falling in line with the exact same phase cycle support. We actually zoom in here, and I'm going on a slight tangent here until I finish up that phases of cycle three. But I'm going to put some pink dots here. So one right here, November 2010 to April 2013. So those two pink dots, those are, when you look at it in terms of just a cyclical structure of Bitcoin's price, those are synonymous, literally synonymous with each other. And that you can see that on top of the fact of being that cyclical, that macro support, you can see the wick of this same, structurally same point. Both of them line up within the middle of the trend range. Just to kind of further show that these are, in a sense, the same trend range or trend zone, but you can almost think about it in like a higher dimension, or like in this sense, in a higher a subsequent a progressive cycle. But so to finish up the breaking down of cycle three, what we see here. So again, we have our double bottom. Then we lead into right here. We see our ABCD. To take that back real quick, we have this build up into around August, September, October 2020. When we hit 12,000, they came back down around 10,000. And then we have finishing out the ABCD pattern right here. So again, right here we have phase one of cycle two, or three. And then right here we have phase two of cycle three heading into 2030, 2031 or so approximately. So the vertical lines that we see on here are these are representative of the halvings. Obviously, the first three halvings that we've seen, taking us back to November 2012, July of 2016, and then May of 2020. 4 years apart each time, as they are statically supposed to happen that way. Those first three, obviously, those are bullish halvings, and we can break it down more right here to say we have this bullish build up into the halving, majority of the bull market. Bullish build up into the halving also off the same support. Then we have the majority of the bull market right here, again off of the same support, but just in a higher plane. Like I said, you can think about it, but also it's just a higher cycle, or the next cycle. Right here we see this bullish build up into the halving. Then we have the actual, if you want to break it down into the smaller one right here, you can, but technically it would, then this would be right here. And this is where things get switched up a bit, because of how I said the nature of the halving of Bitcoin's mining progress is something that's static. It happens every single 4 years. There's no variance. It's an invariant to happening every 4 years. But the actual progression of price over time, factoring in the lengthening of the cycles, the diminishment of returns, and also diminishment of losses during the bear markets as well. So you have this static, basically, structure where these lines are kind of already, in a sense, pre-grammed here onto the chart, but the actual progression of the price is something that's not only dynamic in the literal sense is that it's fluctuating its price from second to second over like a day or weekly, however long its time period is, but on top of that, it's extending each of these cycles. So each of these halvings are going to happen every single 4 years, but you know, this period right here, let me take it back a little bit. So this period right here, next time around, as I painted out right here, this is a lot longer. So you can see how actually we have 2 halvings happen within this entire phase, whereas last time we had 1 halving happen. Whenever you have something static overlaid, imposed upon something which is dynamic in the sense that its certain intervals of importance are lengthening over a period of time, you are going to have more of the static things, whatever it is, occur within the said interval. But to go ahead and zoom in here, I'll zoom in here quickly on the weekly to show it. So those black trend zones I was pointing out, the first one, the origin one, as I would call it sometimes, this red trend line right here. So this is the first one. Then we head into, we have our second one right here, this first black one, and then the second black range up here. There's the exact same things, this from first cycle, second cycle to third cycle, in the similar fashion of the overall, the fractal, basically repetition of Bitcoin's phases and its cycles I'm showing here. But before I head into the daily, there's 4, the way you can identify these cycles is by their peak. You can see right here we have 1, 2, 3, 4. Those right there, those 4 dots represent the 4 identifiers of a cycle. If I take it back and begin, so obviously the next cycle is going to begin where the last cycle, the previous cycle ended. So we're going to take another highlight. We're going to end off at the 4th peak of the previous cycle. So this is peak 1 now, peak 2, peak 3, peak 4 up here. So we head into the weekly, and kind of, to me, this is what really puts the nail in the coffin on the validity and the accuracy and the idea that I'm going over. Again, I have no idea what's going to happen. None of this is financial advice at the end of the day. I'm simply just going over my ideas, but we zoom in here, and what I'm going to do is I'm going to first paint out the phases. So as I was going over, just kind of painting out here, we had this W on the higher time frames. It came up, had this kind of retest into a lightning bolt pattern right here. Actually, I'm going to redraw that. I don't like the way that looks. So I have a W. I have a W right here, leading into this retest, and then we see some massive ABC towards the upside. So that's the model of phase 1 of the cycles for Bitcoin. We see our W right here, and then this literal sideways movement right here, I correlate to the retest up here that I pointed out in the model pattern. So then we come up, this right here is our ABCD pattern that lines up with this on the model pattern right there. That's phase 1. And then obviously phase 3 is just going to be basically this right here. It's just identified by just a pretty symmetrical diagonal inside in form of like a descending channel bear market. So taking all of that away, what I'm going to do is, this is really the nail in the coffin. I've gone over this comparison in the past. want to touch on. And then I have another one I'm going to go over that I didn't go over in the past. But so this is the ABCD pattern of phase 1. So if we take it to we take it to cycle 2, the green one that we're on now, as the background shows, we can see right here. If I take this over, it's quite literally like putting it on top of each other, and it's about as, I mean, what else really more could you ask for? I mean, it was like nearly identical. If I take it and put it under it, more so emphasizing now the actual, this I'll just go ahead and highlight the areas. This area right here to the subsequent, or the corresponding rather, to the fractal pattern, and then the overall kind of bull markets that we see right here towards the upside. But basically what we're seeing is, in a more simplified view, we come down and we make this M pattern towards the downside. We come down and we make this M pattern towards the downside. We have the actual bull market ensue. To break it down a little bit more complex, come up, we see something like this, where I make an M basically with a W as the upper consolidation period, heading into the final bottom. But we can see that happening right here, heading into the actual bottom. You could even actually break this one down further into looking something like this, where we see differs a little bit from the one upper, but you can still clearly see how they're almost the same thing. And even kind of see something similar with the bull market until we build up, and this kind of retest right here. See the same thing on the fractal pattern as well. But this right here is I'm going to draw as a model. Get rid of that. This type of formation and price, where we see these double M's form towards the downside, this type of price action heading from where the upper portion up here being the all-time high into the bear market all-time low, or one of the all-time lows. And we'll see that form, and once Bitcoin makes two M's in a harmonic fashion, bear market's been over every single time. Once it actually obviously breaks bear market resistance to support that and validate that. So the one that I didn't do in my last video that I went over this was, so I'm going to have to split this into two. I didn't go over phase 3 last time around. So I'm going to split this into the bear market and the bull market. We're going to go up to phase 2 of the green, or the second cycle, and we're going to do the exact same thing here. We're going to put them over. We're going to impose the previous phase 2 bear market over this phase 2 bear market. You can see how on top of each other they look pretty close, but pick them up and we get a better look. You can really start to see how it's kind of just the central M. We see this central M right here. And they come into, we see kind of another M right here. And we also see another M right here lasting as the actual bottom range. And then bull market ensues afterwards. And then this area here is just the initial downside. So again, what we see here is we're seeing basically a bear market range of seeing two M's form. Like, for example, this one specifically right here that I drew out basically kind of roughly formed like almost a bullish megaphone pattern, to kind of be specific about it. But if we then go back and we grab the corresponding bull market, I'm going to bring it up here and also show that it's very similar as well. So if I bring this over the price itself, if I roughly connect them, stretch it out, we can see how, again, pretty similar. Obviously it's not exactly the same. General idea is obviously they're both basically kind of forming this descending channel, nearly symmetrical to the downside right here. Once we break out, we kind of just have this slow, gradual, kind of pace up a mountain bull market, type of bull market. But that was really mostly all that I wanted to go over. I kind of nailed the overall, like I said, kind of put the nail in the coffin as to why this is actually accurate. Again, at the end of the day, I could be completely wrong. And maybe none of you actually see what I'm seeing. But nonetheless, to go into the weekly chart here, another weekly chart, what we're seeing here on this chart specifically is phase or cycle 2 to cycle 3. And this time around I have these Fibonacci retracements taken from we go back here, the peak the final peak of the first cycle, which would be the beginning of the second cycle, down to the W phase 1 low that we set. And then we go up to the second retracement right here. It's the peak of the end of phase 1 to the bottom of phase 2. And then we go up to right here, beginning of cycle 3. We have the same exact W retracement taken as I did back here for the cycle 2, as opposed to like I was going over cycle 3. And we can see each of these green boxes right here. When you take the top to bottom Fibonacci retracement of the most important bear markets, I mean really they're the only bear markets of Bitcoin's actual technical structure, this has corresponded to the bull market high every single time since Bitcoin exited its initial cycle, which again back here, you can't really, as I've just kind of described it in the past, another name that I call the first cycle, if I haven't already said it, if I haven't referred to it as an origin cycle, I will refer to that as an origin cycle in the sense that it's kind of just the model, it's the template for everything after, everything price-wise to come after. And it's clearly, I zoomed in here on this daily chart and showed you how it clearly looks the same. You can't really derive as much from it. Like, for example, if I take, I suppose just to kind of perhaps show some flaws in this idea that I'm getting across here. I mean, if I take the retracement, we don't see the same thing happen here. It doesn't apply basically. And what I mean by that is a lot of things that obviously, as these Fibonacci retracements do, apply to each aspect of these phases 1 and 2 of cycle 2 and 3. It doesn't necessarily always apply to the origin cycle because it happened in such a quick period of time, as opposed to the lengthening out of the cycle 2 and cycle 3 really kind of corresponds to really kind of being able to dig more into the actual harmonic progression of Bitcoin's price. But nonetheless, to kind of continue with the actual analysis, again, these green zones line up with every single bull market high. That specifically predicts for the upcoming high with respect to the ending of phase 1 of our current cycle 3, from basically at lowest 175,000, at highest to around 245,000. That also puts the top of phase 2 of our current cycle ending around 2031, give or take 6 months. So around basically second half of 2030 to first half of 2031 is what I'm personally putting the bet on right now. I think is most broad rangely and accurate. And that is what lines up with basically 1.2 million to 1.4 million, again by basically just approximately 2031. And that is also what lined up back here. So I'll go ahead and highlight it. So for our first retracement in this area right here, come straight across within our black Fibonacci range of 3.236 to 3.319. That lined up with the phase 2 high going back here to December 2017. Jump into a new cycle. That is what corresponds with this area right up here. Just to go ahead and kind of further show it right here, this would be the green range after the W double bottom Fibonacci retracement taken when we hit the what would be the second peak of this ABCD pattern, as I circled it right here in pink again, as I've been doing. So this model, this turquoise is the model impulse wave that I've used on here. We can see a white one right here on the first retracement, second tracement, see a black one, we see another white one, then a black one. Drawing correlation between the white ones because each of these trend lines you see going upwards, these ascending trend lines acting as a range, these purple dotted lines. Each of these, so there's 6 of them obviously, and they are the exact, each of them, all 6 of them are the same line. What I did was, so to zoom in here, I took the trend as a resistance, so a slope line basically of the resistance we've been seeing in this bullish build-up, kind of this double bump pattern as I've called it in the past. So I took that from right there, and then I just cloned them, and I took them to right here. So this is basically, as I've been saying, haven't said in this video, but I believe we're heading into a bull market that is going to be very similar to how Bitcoin behaved from the March crash to the high of 64,000, as you see on here. But basically what we see is we see this build-up pattern into an extended fifth wave, if you want to think about it as an impulse wave. Again, these are the exact same trend lines that I'm using here. And we take it back down to phase 2 of cycle 2. We can see this kind of extended bullish build-up right here. once we bumped our heads twice on this trend line, came up and did it again right here. But the picture that I'm drawing is we see this kind of build up right here, and then we see the majority of the bull market then take place afterwards. We go back to phase 1 of cycle 2, going all the way back to 2011, beginning of 2012. We see the same thing here. We see this bullish build up into, and what I find highly interesting is it's the exact same trend line that corresponds to, so this right here, this first black ellipse right here is the buildup of the W of phase 1 in cycle 2, and this towards the upper right, this second black ellipse is the bullish buildup after the W of cycle 2. So we're seeing again fractal-like repetition. We're seeing the same thing happening at a longer time period with less returns, etc., lengthening of cycles, as I've been mentioning, things along that nature. But as you can see also, zooming back out here, with each of these right here, these red circles we see, every single time we build up, we have this double bump, this bullish build up, it leads right into, except for our last one right here, because this is an exception given that it's not technically a bear market, it's more so a retracement, even though I'm not going to deny that 64,000 down to 15,500 was definitely brutal enough to be considered a bear market. But technically, thinking about it, this is kind of an intermediary bear market. I'll call it that. So actually, this kind of just came to my mind. So as I'm highlighting in pink, these are what I'll call absolute bear markets. And then this last highlight right here, which is now in lime green, each of these pink highlights are what I'm going to call absolute bear markets. They're kind of first order, first layer bear markets. And then we have up here this lime green intermediate bear market, or second layer, second order bear market. It's not a fundamental one, as you would put it, if you were to think about it within the system of the phase cycle idea that I'm going over. But this yellow box that we see right here is the support, the cyclical support, as I went over in the previous chart, those black dashed lines. Again, we can see right here, if I am indeed correct, we will continue to bounce along a support in the macro sense that goes all the way back to June, July 2017, which is what corresponds with kind of I suppose you call it the blow off top of the phase 2 of the previous cycle that ended at about $20,000 or so. But that's okay. So I have to look at these charts sometimes and actually remember what I need to go over, because I have so many things, not only on so many things on one chart, but I have 15 other charts opened up. And for those of you who are familiar with the content, I don't script any of this. I kind of just go with the flow, which is why I stumble like an idiot half the time. But anyways, this is actually what I put in a community tab post up about like a week ago or so, pointing out how, so we can see these little measurement tools down here at the bottom, these 32 bars, and these begin, so this first one begins from the candle close low the week of March 16th of 2020, taking it out all the way to the week of the 26th of October, again 2020, when we, looking up here, my cursor is when we had our second candle close above the previous local high, which we had set in August of 2020, around $11.7 to $12,000. And that is what corresponds with the second measurement tool right here. We take it from the candle close low of this low within the ascending yellow range you see here, and then we take it out 32 bars. When I made the community tab post, it was 31 bars, and that was the first candle that we closed above, and that is what lines up with the week of the 19th of October. And now we're on the 32nd one, so as long as we close, we have 2 days left in this on the weekly candle. As long as we close above basically around 29.5 thousand, just a candle of the week of 10th of April, this should still continue to follow through. But if we were to continue to move similar to the actual candles, there's perhaps maybe the possibility that in the next 2 days we could, if things continue to go similar, and by that what I mean is if I take it from the candle close low of our first candle right here to the 31 bar measurement when we got the first candle closed after, it was 4.4%. When I compare it in correspondence to our current one, it was 3.34%, so roughly the same. There's about a 17.5% difference between 4.04% and 3.34%. But if we do the same thing again, we'd take it to the 32nd bar candle, We'll actually take the wick this time. That was 18.91%. Around 15.5% is, again, that same around 17% of the prior measurement. Take it to our current candle. That would have to put us, let's say we moved similarly as we have been, around 15, get there eventually. That could take us up to 34 or 35,000. So if in the next 2 days we see that move up to 34 or 35,000, that will then just continue to fit best case scenario in validating this 32, 31 bars pattern that I point out in kind of more in the shorter term, but not on top of that, the larger term where we're seeing, as I'm going to highlight here, this bullish build-up right here, break into major bull market, bullish build-up, break into the major bull market to end out this current phase 1 of cycle 2 that we're on, head again to the bull market high range throughout Bitcoin's entire history, starting in the first cycle, if you consider the origin cycle as the actual origin cycle. And that's from the 2.186, 2.253, 2.321, and the 2.362. Each of those are taken from the lowest candle close to the highest candle wick, averaging in all of the previous bull market tops. Last thing that I wanted to go over, so if we take a look here, again, drawing back to our little red dots that we have on here, seeing how I have them overlaid on top of the RSI as well. What we can see here is not only are we in the exact same range of this upper portion right here, I'll go ahead and put a pink highlight through it as best as I can. Right here with my cursor, we're in the exact same range after exiting the exact same essentially structure of seeing a bear market low with entering this lowermost range down here that I'm highlighting. And then on top of that, being within that same descending range according to those red bubbles, we even have formed almost the exact same kind of structure of the RSI right here. Comparing it back to the previous March crash, I said I think it's going to behave mostly the same, more so looking like an actual, as I've mentioned in previous videos, that kind of bull flag consolidation. But overall, what we're seeing leading into each of these red bubbles are basically a double top. You can see on each of these, the resistance, we hit it twice. We came down and we hit the support twice. Then we got led into the red bubbles. And then we then entered after hitting the 0.618 on the Fibonacci retracements, also lining up with these ascending purple dotted trend lines, etc., so on and so forth. Everything else I went over previously, all was a bunch of different aspects having confluence onto a single point of time where Bitcoin decided to then begin an actual bull market. If we take a look here at the MACD, we can zoom in, we can see the triangular consolidation. You can see how throughout this, as I've gone over previously, we have this tightening, this building up of price momentum until it finally breaks in a bull market towards the upside. We are converging along the white dashed line, which is the 0 point. We do the same thing right here until we build up and finally, again, break up towards the upside. Just representative of price throughout the bear markets, building up bullish pressure. As the price is going down, we see the MACD slowly converging in on 0 until it converges in on that 0 point and makes the decision to break towards the upside. I mean, we can actually see the exact same thing each time. We see right here this kind of M, and then we break up. We see this M right here, and then we break up. Now we're seeing this M right here, and we should break up. But that is, I think that was all. Yeah, all right. Just gonna make sure that was all. That was all I wanted to go over for that chart. So for this chart, another weekly chart for Bitcoin. What we can see on here is I kind of wanted to approach this from a mathematical viewpoint. In this text box up here, we can see, and I'll read it out. Trend lines are upper/lower bounds of the rate of price flow over time, just the progression of price over a period of time, kind of representing its rate of change, similar to tangent lines in mathematics. But trend zones are areas within price, or trend zones are areas within which price fluctuates. So basically it would be representative of this yellow, or this, my bad, not yellow, the red little curve or function, I suppose, if you think about it from a mathematical point of view on the chart. Which really, I mean, if you think about it at the end of the day, when you kind of the whole point of one of the big points of my Bitcoin analysis in this video is that, I mean, your Bitcoin's really just a mathematical function. There's some sort of mathematical function out there that would, I'd argue that would fit it perfectly, but at least fit it so approximately accurately that it would basically, I mean, it's pretty much the same thing. But so again, those trend zones are the area within which price fluctuates. Again, that is basically, so it's the area within these yellow, or not, gosh, why do I keep saying yellow? These purple trend lines right here that you can see on the chart. And look at our trend lines and zones. Defining them as they can be linear or curve linear. I'll get to a curve linear example later on, but trend lines and zones are as the tangent / secant lines / zones, whereas the asset itself, as I was going over, is the functional, like a mathematical function, output of the specific parameters. So basically, just to kind of get it across simply and quickly rather than spending forever on it, the purple lines are, in a mathematical sense here, acting as tangent lines. Tangent line, a lot of times you'll just learn, like, it'll see, definitions will say that it has to pass through one line, and it's not necessarily true. It can pass through more than one line. Like, for example, this purple line right here in the middle is specifically tangent to the high of 2017, and then would be tangent also to the local high of 2019. But then right here, when we head to August to September, October 2020, it would kind of cease to be tangent, more so of a secant, because it's not necessarily skimming along a point in terms of a high or low of the price itself, but it's going straight through the actual movement of the price. But nonetheless, I'm using these purple lines in the sense of tangent lines, whereas they are representing the rate of change of the bullish consolidations. Some of them are more, I mean, they're really just bear markets, but I'm going to just call them bullish consolidations. These are basically trend zones, the area that the price is as it fluctuates in, that acts as the average, especially if you're looking at it in terms of like secant lines, average rate of change of the specific integral, or not integral, I mean, it's also an integral too if you think about it in a calculus way, because you take an interval rather, from June of 2017 all the way to roughly August, September of 2020, and you just specifically hone in on that area of price, and that's what these trend lines represent. They represent the, they're tangential, or you can think about them as secant lines as well, that represent the rate of change within that specific integral, that period of time that I've taken from that date range that I mentioned, again, like June of 2017 to around September of 2020. And that same thing, that same idea applies to each of these other purple trend lines representing these bullish consolidation zones the price is fluctuating within. And then down here at the bottom right is a pattern to kind of simply get across in an analogous sense what I'm going over. Bitcoin, not only is it kind of like a mathematical function, literally, in a sense, but it's also, you can think about it as literally a roller coaster, which is, it's why I use the highlight red right here, because the roller coaster on this image is red. Then I have a little Bitcoin figure, a little Bitcoin character here, kind of just denoting it, kind of trying to paint that picture that, Bitcoin's kind of just on a roller coaster. It's kind of, if you think about it, a Bitcoin character, like he is down here, hiking up a mountain over a period of time. And then up here, with this XY axis, we have a fractal image of the most recent bear market. And then we have our trend lines associated with that, this falling wedge that I've been pointing out. And I just have it overlaid on the X and Y axis to kind of get across the ideas. Like, you think about Bitcoin as a function, like when you draw trend lines, they basically are acting as tangential or secant-like mathematical lines that are segmenting off or creating some sort of an interval of where Bitcoin is seeing the specific bearish rate of change, to kind of put it in a way that would kind of mesh both of these two concepts, math and market analysis, into one. And then most importantly, this white curve you see up here, and it's also on the chart as well. I'm going to go ahead and get rid of these little text box right here and zoom out, but we can see here, and I'll actually go ahead and get rid of the highlight real quick. We look at these, again, these white curves. So basically, It's going to take a little bit of imagination, but like in your head, just imagine you take a piece of paper and you cut out the chart of Bitcoin. Let's say you traced Bitcoin on a piece of paper, like a notebook piece of paper, and then you cut it out as best as you can. And it's essentially two-dimensional, but imagine that it is progressing throughout, and we can use this chart right here of the Bitcoin rainbow chart as an example. So we can see this kind of logarithmic progression of this rainbow, denoting the nature of Bitcoin's price progression over time. But imagine that you have this piece of paper cut out of Bitcoin, and it's within the volume or the space of a three-dimensional cylindrical curve that is curved like this, like the logarithmic curve that Bitcoin is. So we go back to this chart. I'll zoom out a little bit to show the actual progression over time here. But so just imagine that Bitcoin is like a piece of paper moving through a hollow logarithmic cylinder, and the white curves are, if you were to spiral a coil around the surface area of the logarithmic cylinder, and it acts as a tangent curve throughout the entire progression of Bitcoin's price, and it specifically runs tangent to the absolute highs and the absolute lows, as I have pointed out on here, where it begins right here at the high of 2011 around $1,200 or $30, my bad, then runs down to the low around $2, then heads to the next high of around $1,200 and heads to the next low of around $180. Really, this what you're seeing here doesn't do any justice, because, like I said, it's going to take some visualization, because how it properly needs to be displayed is in 3 dimensions. But hopefully you kind of get that idea. Especially, I mean, if you're familiar with the mathematics in general, and like you understand like what tangent lines actually are and what they represent mathematically. Thinking about like a tangent curve that wraps around a function as it progresses, and especially when you think about an actual stock chart or on Bitcoin here, like thinking about it, looking at it, if it is literally just a mathematical function, there's a specific spiral curve that can wrap around the price, only touching the absolute highs and the absolute lows. It'd be nice to find that actual like mathematical equation, just like it would be nice to find a mathematical equation that would fit Bitcoin as a best of fit, because then you could really accurately project out its progression into the future, because you actually have the function for it. But outside of that, I wanted to go over the RSI's, stock RSI MACD on here. This weekly chart, we can see the same thing I was pointing on in the previous chart with those red bubbles, with these this double top right here. So there's a double bump towards the upside and a double bump towards the downside. Each time this happens, we then begin the majority of the bull market. So we're consolidating in the center, the upper level of the neutral zone, which is good to see. It's bullish behavior. If we take a look at the stock RSI, we can see right here in this area that we are we're entrenched in the upper zone, which is what we want to see to have a positive acceleration. That's how it happens in every single bull market. If you were to go back and look at that, for the MACD down here, basically the exact same thing. As I mentioned with those yellow triangles, we can see that we are getting very close here to breaking out, and it really should happen within, I mean, assuming obviously that the bear market low has been set and what I've been going over is correct, we should see it break out. I mean, no later than around the last week of August or so, into the next bull market. But so far, I mean, again, like I said, when we've already gotten support basically on the top of the 0 point line, which, like I said, lines up with this M pattern that we see right there, and we see it right here, those 3 or 4 that I mentioned on that last chart. So let's see, these horizontal black dotted trend lines that I have on here just kind of represent the final point of affirmation in terms of like gaining ground over on some sort of support, which was previously a massive rejection. These just line up with the previous all-time high, what was rejection that needs to be flipped into support or strong strength above, and that is just, well, if we zoom in on our current phase, once we basically, common sense, pretty clear, once we start to trade over candle close at 65,000, especially 69,000. That's really going to kind of be the final nail in the coffin. Like, hey, we're definitely, obviously, heading to higher highs. But that was really all that I wanted to go over on this chart. I kind of just wanted to kind of quickly sum up this chart. I just want to kind of put it on your guys' mind, because again, this isn't, like I said previously, none of this is financial advice. I'm kind of just going over my ideas, and really I kind of want this channel to have an educational orientation where you try to take away things that I go over in these videos and apply them in your trading scheme, or use them in whatever way you wish. But just try to, like, if you have it beforehand, think about any type of market chart, whether it's Bitcoin, some other cryptocurrency, an altcoin, Ethereum, or gold, or silver, or the SPX, or something else, whatever it may be. Just kind of have it sitting in the back of your mind that it's essentially just a mathematical function overlaid over a grid chart, which I don't have on here, with an XYZ axis. And you're kind of just, whenever you draw these trend lines, you're measuring off in certain intervals, certain segments, kind of like taking an integral in calculus. You're kind of honing in on this specific trend that it's set, where it had this specific rate of change that led it throughout, for example, this descending converging channel from November 2013 to around September 2015. But here so this chart right here kind of sums up, I'm going to use it to kind of sum up everything I've been going over previously, and kind of go into the mathematical sense of things. So how I mentioned on the previous chart with the purple trend lines, kind of setting off an interval, like an integral in a sense, segmenting off a certain period on the price of Bitcoin, and it has a specific rate of flow throughout that interval. You can think about it as if you were to look at this segment of a flowing river and compare it to this segment of a flowing river. This segment all the way back here is really slow, but then 15 miles up ahead, there's a massive dip in the bottom of the river that causes the speed of the water to pick up, and it develops a faster rate of a quicker velocity, etc., than it had in the previous segment of the lake. So basically what we see here is each of these dots, the black ones represent black holes, and the yellow ones represent suns. The blue ones are stars. The yellow ones are sun stars, you know. And then the blue ones are also suns or stars, but they're bigger stars, you know. Smaller stars start off towards the kind of yellowish region, then it moves into red, and then it moves into blue, being the biggest. And then the black holes are not really commonly thought to be, but I mean, if you really think about it, black holes are the final evolution of what a star is, because when a star gets towards the end of its lifespan and it goes supernova, if it was previously of a sufficient size, when it goes supernova, it is then going to breach a threshold, and being in that supernova, when it explodes and its magnitude diverges out to a greater size than it was previously, it reaches a threshold of basically massiveness that causes it to, because it's so massive, the universe can't efficiently and properly hold it, so it snaps it outside of existence, like into counter or anti-space, which is what a black hole is, because there's still mass in a black hole. There's obviously mass there because it's the central gravitational point of of galaxies. That's why we spiral around in our solar system around the galaxy. But to get the point across, the black holes are kind of bigger wells in space and time. Whenever you have a star or any body of mass, it creates a gravitational vortex, essentially. This is the most accurate way to think about it in actual three-dimensional space, instead of it being on two-dimensional space. Typically, gravitation as a force will be denoted using like a flat sheet, like a trampoline. When, you know, if you put a massive heavy weight on a trampoline at the center, it's going to weigh the trampoline down towards the center. But how it's accurately shown is through this right here. Instead of it kind of having that two-dimensional draw, it's three-dimensionally, it's pulling everything towards a certain center point from every single degree of freedom in terms of vantage point. You can see how it's basically as it's going around in this box. Wherever it is, it's pulling everything around it inwards to that specific point. And so what I'm trying to get across here is each of these black holes, and I'm trying to paint almost kind of like a poem here in art, I suppose. Each of the absolute highs and the absolute lows, so bull market highs and bear market lows are they're the big boys, they're the black holes. They're what you want to trade. Like ideally, you want to be buying these upper black holes and then selling these lower black holes right here. The only reason why this first black hole right here is so big is because we ranged in this bear market low for so long. But ideally, you want to sell the absolute highs and you want to sell the absolute lows. And then the yellow stars represent kind of smaller, points in space and time. Again, going back to this image where everything is pulled towards that point. You can just think about it like a river. There's certain boundaries that shape a river, and it's the gravitational pull of the black hole to the sun, to the sun, to the sun, to the sun, to the final black hole, there being 4 suns and 2 black holes. It's the kind of structure that, acts as like where price is specifically gravitating towards. It began all the way back here. If I were to have an actual black hole down here, up to this black hole, down to this black hole, to this black hole, and then so on and so forth, as I have clearly pointed out here on the chart. But I'm going to go ahead and kind of stop this explanation here because I'm sure you already get the idea. Hopefully get the idea as good as possible. Really what I'm just trying to point out is just my idea that I believe that while there's manipulation in every market, and there's definitely a degree of manipulation in Bitcoin, I do at the end of the day feel like Bitcoin specifically has some sort of pre-programmed movement just because of kind of what I've already been going over in this video. The fact that it's literally repeating the exact same cycle over and over again, but over a longer period of time, and it's decaying in basically velocity or strength. But let's see here. So I haven't gone over this indicator in some time. This is the bear versus bull power indicator. You can see that we've broken out of this long-term resistance. It looks a lot like the MACD. It's nearly the same thing almost. But you can see we've come down and we have recently found support along that right here. So again, this is another thing to further indicate that we are definitely indeed in a bull market. And I'm going to go ahead and take the time here to say that this is kind of a video where it kind of goes into the thumbnail. I mean, really, the bears should be trembling right now. If you can't really tell that Bitcoin it's no longer in a bear market, it has already broken out of a macro long-term resistance similar to every other single time. It's gone down to a diminishing degree than prior bear markets. It's lasted longer. And then on top of the fact that we broke that resistance, we retested it twice and we bounced off of it. And then you factor in every single one of these indicators, RSI, etc., that I've gone over. Why? There's really no good reason. And you even think about this chart right here, the rainbow chart. We're in the accumulate stage according to this. I mean, there's really no good reason to see that there's going to be a drop to, 9,000 is the lowest that I've seen entertained. At the end of the day, that could very well happen. I'm not saying it can't happen. I've gone over models in the past as to how that could happen. And we would basically see, I'll go ahead and quickly highlight it here just to kind of go over that once more. But, let's say we do get rejected downside. We basically would see movement like this. But I feel like the fact that we have already closed above right here, if I zoom in, the fact that you can see that we've closed this gap right here. We closed above that right there. We have seen bearish divergence on the weekly chart from the local high of April to the local high of June, which is not necessarily, it's not great, but that doesn't mean that it's going to go down to, below 20,000. Like I've been saying in more recent videos pertaining to what we see right now currently, right here, so I've been circling. Bare minimum, I think that it's still possible we could see a test deck down to 20,000. That brings me to this chart right here. So again, what we see on here with the black highlight, the black shadow in the back is we see our macro falling wedge of this bear market. We can see it's an A, B, C, D pattern towards the downside. We can break C to D into a bearish, or technically it'd be a bullish impulse wave. We've come up, we saw right here our double retest as I mentioned along that macro resistance. We've come up and we are now making our second high along this white dotted horizontal, very, very important macro pivot point basically. I mean, if we go back, I grab the highlighter here, we go right here, major support, and then right here we went below it, came up, got rejected basically twice, and then we entered the the latter half of the most recent bear market, which headed to $15.5 thousand approximately. Now we're coming up to it. We have right here and we have right here where we've hit it, and we are actually forming, according to this RSI with Bollinger Bands, we are forming a, actually no, according to this one we're not getting any bearish divergence. That's a good thing to see. But ultimately I think that we will end up breaking above this. If I zoom in here, factoring in that everything else I've gone over, we start to lose 27.5 thousand. We could, you know, head back down to, I mean, considering this short-term support zone right here, this blue dotted one, and we could come back down to 23,000 like I've been mentioning, down to 22.5 thousand like I've been mentioning. That still definitely is a possibility. Although if we end up losing that, and then we end up losing 20,000, then only when we really start to lose, really, if Bitcoin starts to lose 18.5 thousand, then likely it's probably going to go lower. But until then, I wouldn't really, if I'm going to give any, I suppose, any type of, you know, in quotes, advice here, there's really no reason to worry until it really starts to lose 20,000, then like worst case scenario, 18.7 thousand. But right now, again, it still holds same. Really nothing much has changed since my last video, which is like 12 days ago, and kind of the medium term here. We've just been, I zoom in here again, we're just ranging in the rough $30,000 range. We have recently seen right here, we've seen a breakdown. If I zoom in here on the kind of consolidation we've been building up right here, we had this slight ascending range. Starting to lose it now here on this 12-hour chart. And we could come down to upper bound in the Gaussian channel, 29.2 thousand. Median is 28.1 thousand. Lower bound in the Gaussian is 27,000. The I think it's the 200 estimated moving average. Yeah, that's what it is. That one sits at 27.5 thousand. The 800 estimated moving average sits at 26.6 thousand. And zooming back out here, if you pay attention to the red dots and the ascending black dash trend support, that lies up basically lowest at 26.2 thousand. So, thinking about what I said last time, heading down to 20,000 and 18.9 thousand worst case scenario. Realistically, if we start to lose 26,000, then we should, I would think, not necessarily, but more likely expect seeing maybe $23,500 down to 22.5. I mean, then obviously if we lose that down to 20,000, but at this point I'm kind of beating a dead horse. Right now 32,000 is the up ground that we need to claim. We need to see no lower than a 12-hour, really the daily and higher. Once we start to see candles close and subsequently open above 32,000, we're likely going to see a move. According to, let's see, on here, we see this black pattern. This is a cup and handle pattern that some people, this is one of the patterns that's been going on in the space right now. The broad range of every single price pattern you can look at on here on Bitcoin, bullishly speaking, basically takes us up to a range of 37.5 thousand to 48,000, with a possible extension up to around 52,000. Which, if we zoom out further here, we'll see the curve linear tangent line that I was mentioning earlier. As I've gone over this on many times in past videos, the light green curve linear lines that you see. But we can see here that this purple range that I mentioned is the next likely impulse into this range when we see another move towards the upside. It's basically the crux of the consolidation that we saw sideways, ranging from roughly 28,000 to 69,000. during the kind of recent bull market top and that range that it's set. But so lastly, to go ahead and wrap up this Bitcoin analysis, here, this is a monthly chart. This is a very, I suppose, audacious idea here. I've gone over it, I think I passed briefly before, but the idea is that if we pay attention down here to this RSI, we can see that it is setting a lower low, a rough lower low structure every single time. Each and every single bear market, the RSI is dipping lower, and it's following a rough trend range, which is denoted by the purple dotted lines. So what this is showing is as I've gone over in the past, RSI represents velocity of the price chart. The stock RSI represents the acceleration of the price chart. The RSI would be a first derivative of the price chart, and then thinking about this mathematically, and then the stock RSI would be a second derivative of the price chart, but first derivative of the RSI. Kind of gives you a little bit more. Our stock RSI gives you some kind of early indication data on what the RSI is going to do, and the RSI does that for the price. But the idea here is that we're seeing the velocity slowly deaden more and more each bear cycle. It's basically what this is representing is the decay that we're seeing in the logarithmic projection, and the fact that the bull cycles, the overall progression is kind of just losing strength in terms of the fact that it's just not, the bullish returns aren't as much as they were every single previous cycle when you take the current cycle. So the idea here is with each of these black and white fractal patterns that we see is my idea here, what I'm proposing is once we finally hit 0 on the RSI, so basically we'll see something like this. That's basically the point that I'm painting out here. When we finally get to this area right here, we continue this trend, and it seems like we're painting here on the RSI for Bitcoin. Once the RSI finally reaches the velocity threshold of 0, my idea is that it's going to line up with a point in time where we see Bitcoin's momentum. This is the MACD, where we're going to see, I'm going to stretch these out a little bit. So where we're basically going to see here, if I draw this RSI back out once more, we'll see the RSI continue to make lower and lower lows. It'll finally hit that 0 threshold. And basically what I think we're going to see is I think velocity will hit a 0 point, while the MACD is going to continue to swing higher and lower, basically inverse roughly to what the RSI is doing. It's going to go lower and lower each time and higher each time. And so basically what this is representing is at Bitcoin's lowest moment of price velocity is when its price momentum is going to be the highest. And to me, how I interpret that is that at some point in time, whenever that actually happens, this is just the idea. Obviously, it's not going to happen right now, as this price chart more specifically shows. But I believe that is going to could likely fulfill the whole hyperbolic S-curve, basically, that some people have posted on Bitcoin. A lot of people correlate it to the adoption rate of Bitcoin. Whenever Bitcoin's adoption is completely breaks the roof and it's like globally adopted, that's when this second portion right here would then ensue. But I'm willing to bet that would more likely be to what I painted down here on these indicators, RSI and the MACD. Whenever velocity hits rock bottom, the momentum of the price of Bitcoin will be at its most drastic. And that's basically either going to then lead into a bull market, basically a bull market that lasts, like obviously this is basically just a straight up bull market right here, this white pattern. Yeah, we have these small, like dumps here and there, like right here and right here, but overall it's just kind of on the surface level view of this white pattern seems to, to the eye it appears more bullish than this first half of the chart. So that's if at that point where velocity is 0 and momentum is at its maximal, that if it decides to go to the downside, I personally believe that it would end up acting out something like this. It basically would end up looking like a rainbow almost, more kind of like an elliptical rainbow, like an oval. Like if you were to cut like an ellipse or an oval in half, it'd be one of those the upper lower portion of it, like the circumference of the shape itself. And then I think it would likely head back down to zero. I mean, thinking about it logically and in geometric sense, that would kind of makes sense. I mean, it could do something like this at the end of the day and come right here and then finally, do something like that pink path. But I mean, at the end of the day, this right here is completely more speculative than what I had already been going over, and it's like borderline, not even really borderline, it's straight up just audacious, because it's this is something that would occur so long in the future. I mean, if I actually go back down to our RSI down here, in the MACD, we can see that this trend line, if it follows this descending support, the RSI does, it would meet zero roughly 2040. So the beginning of around 2040 would be, if this follows through, this trend stays the same, around 2040, the velocity of Bitcoin would hit zero, and I would project that the MACD is going to be, this is going to look basically how I've been painting it in a lot of these other videos. If you look at the MACD, it's basically just swinging higher and lower as it progresses, and it's building up massive momentum, perhaps to kind of compensate for the fact that its velocity is dying, is decaying over time. But that wraps up Bitcoin. So now for Cardano, this is simply just a cup and handle pattern. Oh wait, no, I forgot. That is totally not the last thing that I want to go over. Where did I have it at? I may have forgot to pull it up. If I forgot to pull it up, I'm not going to worry about it. It's not that big of a deal. Actually, anyways, I'm just going to quickly state it. That is, so like I mentioned earlier, we had this cup and handle pattern on Bitcoin. There's also, because I just want to mention all the patterns that people are entertaining right now. There's also a head and shoulders pattern, as well, that we can find. I can remember exactly where this pattern is. There it is. So basically what we're seeing is kind of like a head and shoulders. I'll have to redraw this, but basically seeing it like this, if you were to kind of break it down. I don't personally like this, but there are a lot of people calling this out, and I just wanted to kind of mention that. I don't, also, like I said in my previous videos, I don't really agree with the megaphone pattern either. Although, going to Cardano and the fact that I had this megaphone, or not. If I called that a megaphone, I meant to say cup and handle, but this is also a cup and handle, obviously. Because I didn't want to, like, seem contradictory. Like, oh, I'm drawing a cup and handle in here, but I've said in the past that I don't really like this cup and handle right here. But, I mean, if you look at it as a cup and handle, it's basically a cup and handle that formed with the head and shoulders representing the actual cup version of it. But anyways, again, here for Cardano, we're seeing what I believe is a massive cup and handle. You can break it down more firmly into, we see a W right here into this bear market, broke above, tested it twice, similar to Bitcoin. And then the bull market, I believe, is going to, according to my phase cycle theory, and bring that over to Cardano, $25 to $50 sometime next year is when I believe we'll see that for Cardano. This here is just a model pattern that I copied over. This is the conservative and maximal price projections targets you get to take for the cup and handle pattern. That's what creates this range right here, obviously. It's pretty clearly denoted. You can look here at the RSI. You can see a very clear picture painted. We are still, actually, we just recently came down and we retested the bear market low zone, basically. We printed pink vector candles again as well. If I zoom in here, you can see we got another pink vector candle printed. So I personally would say if you're in Cardano, again, none of this is financial advice, but this could possibly be the last time you could buy Cardano at anything closest to the lowest low it's going to set until it never sees that price again. Assuming Cardano is something that thrives in the future. I have to zoom in here real quick for the MACD, but it's really the exact same picture I've been painting for the MACD. How we see, we had our bear market, price is going down the entire time. But when the bear market set its first local low, the MACD made its lowest low, and ever since then, as the price was going down, the MACD has been building up as it's spiraling up in here, coiling up like a spring, building up momentum, building up pressure until it finally breaks for the final time, entering into the next bull market. So here for the total crypto market value, it is really nothing new. Oh! Now I'm having a massive light bulb moment. I just wasted every single one of yours time. It's good thing it doesn't matter. This video's long anyways. But the head shoulders pattern was on here. Just had a massive blind moment. I'm strawberry blind, by the way. Now I'm kind of ranting, as I do in my videos half the time. Anyways, we see here just a cup and handle. The bottom range of the cup and handle is built up with that head and shoulders pattern, like I mentioned. Gosh. I just want to kind of explain myself here. I have so many charts in some of these videos that I make that I straight up forget what I'm going over half the time, because like right now this video is an hour and 5 minutes. You're still here watching it and you're actually watching the entire thing. And if you watch all of my videos, especially the longer ones, you can actually sit through me rambling, literally what I'm doing right now. I appreciate it. Thank you for listening to my idiotic self spew in a bunch of tangents. But anyways, quickly, what is most important here, as I'm sure you could already tell, this looks almost identical to Bitcoin. Same falling wedge pattern, cup and handle, inverse head and shoulders. Really important, I think, is 1.7 to 1.8 trillion. Basically, really, kind of the final nail in the coffin is 2 trillion, I believe. Total crypto market cap breaks 2 trillion. That's going to be very good. But right now, it's kind of important to break above 1.3 to 1.5 trillion and find support above that along the, like I've painted out here above the yellow support. Was resistance. It's similar to the white dotted horizontal range that I went over for Bitcoin earlier. But again, I believe this will just, obviously, it's going to top out, according to my projections, sometime this next year. Could bleed into early 2025, but I doubt it. Although, I do think that it's going to go higher than what I have on here, up to like 5.26 trillion. I think it's probably going to go up to 17 to 21 trillion overall for the entire crypto market value after everything is said and done. If we take a look here on the indicators, it's essentially the exact same thing. You can see went from oversold down to our, overbought territory down to our oversold territory. They've built up. We have this similar, this double bump to the bottom, and the upside, this kind of megaphone looking pattern within the upper bound of the neutral zone. Again, just all things pointing to bullishness up ahead. We see the stock RSI looking how it needs to be in the upper range, denoting a positive acceleration behind the actual velocity. Same thing basically here pointed out for the MACD. And just to kind of go ahead and stop instead of going over the same exact, oh look, it's the MACD and it's spiraling, it's going around the 0 point. Everything is looking nearly identical. It's just kind of, when you see nearly everything looking almost identical, that's also, again, that's perhaps the biggest confluence you could see in the markets, strictly speaking, our cryptocurrency here. I mean, literally everything looked the same. Cardano looked the same. All of the total market caps essentially look the same when you compare it to Bitcoin. You take every other altcoin just about, and it's pretty much in the same example, price harmonics. So if we come here to the SPX, really all that I want to go over here is the fact that we are seeing a bearish divergence. Right here we can see positive support slope-wise, ascending resistance up here on the price, and then a descending resistance right here on the RSI. MACD and stock RSI are also doing the exact same thing as well. So it's basically a triple bearish divergence that we're seeing here. And this white box right here, I believe, is very important for right now. So if we start to lose on the SPX 4200, which those of you familiar know that I personally, that's where I think we're going. I think we're heading into the next 2008 market crash for many reasons that I'm not going to go over in this video. After we lose that, so lowest at 4,200, and then we begin to lose basically 4,000. I think we could likely then head to around 3,800 to 3,700, and then once we lose 3,700 to 3,500, then I think it's going to be a pretty rapid drop you know, kind of like the 2008 crash and how bad it was. So lastly, we have here Ethereum. I went over this chart many months ago where I was drawing massive triangles around the entire history of some sort of chart and getting as many touch points as possible because it makes a valid structure. I mean, and we can see here that if I zoom in, so we take this massive triangle that has, let's see, 1, 2, 3, 4, 5, 6, 7, and then lastly 8 right here. Currently, 8 total touch points, and we just recently came down and we found the local low right here when we wicked to around 1600. Really, it was literally right on the trend. I haven't touched this in months. I haven't even looked at this chart in months, and we came down and we touched this for the second time in history. The first time that Ethereum touched this, the only other time Ethereum touched this was literally back when it had its lowest low in October 2015. So you can take this with a grain of salt if you want to, because I suppose it's, and even I kind of think about it, like it's kind of weird. Like I literally just put a massive triangle around the price. How's that going to mean anything? You're just drawing random crayon marks on the chart, right? That's what anybody would say online that looks at my, like I'm kind of talking about a Reddit post. One time, I'm going on another tangent again, but I posted stuff on Reddit a while back, and Reddit is filled with so many people that are so unbelievably rude. It's like everybody was just like, wow, look at your crayon marks. It's just like, okay. Anyways, I can delete this stupid pink blob. Alright, I guess it doesn't matter. Again, we're also seeing a cup and handle pattern on here as well. This right here is the model for it. This W is just the exact same W that we see right here from 1, 2, 3, 4, and 5 into the handle right here. We've already broken out of it as the model suggests. Anyways, price target, I believe, reasonably is 28,000, around 32,000. It could push up to around 45 to 52,000, but that would then make Ethereum eclipse the market value of Bitcoin. I don't personally think that's going to, I kind of generally still think it's going to happen. But if it does happen, I don't think it's going to happen in the upcoming bull run. Although, I mean, I could be wrong. But like I said, 28 to 32,000, 45 to 52,000 or so, sometime next year. So the last thing I'm going to go over in this video is I'm going to have Cardano, Ethereum, Bitcoin, total crypto market cap, SPX, New York Stock Exchange, and the NASDAQ. I'm going to go to each of them. I'm going to show you how they are literally all doing the exact same thing. You can already clearly here see, don't really need to explain it. Cardano and Ethereum, I mean, it's self-explanatory. It's a massive W into a just downwards bear market. We take into account Bitcoin right here. We can see that Ethereum and Bitcoin look more alike than Cardano and Bitcoin do. Cardano looks the most different, and that's really kind of where the bear market comes in. It was really kind of flat, whereas Bitcoin had this more prominent M right here, and then this M right here. Ethereum also kind of had that more prominent M and another more prominent M right here. But you can still actually see the M's here on Cardano. You see it right here, and then there's one right here. It doesn't really do it justice because it's not the actual chart, and it's not really zoomed in, but it is there nonetheless. So we see that, again, that's going back to what I mentioned earlier. We see intrinsic, not just to Bitcoin, but because Bitcoin controls the entire market, everything else looks like it. You see initial downside, you see an M, you see another M, and boom, bear market's over and the bull market's begin nearly every single time. So we go up, purple chart, CMV, crypto market value. Again, we can see here, not showing ADA, but ABCDE looks exactly the same. The crypto, what I find interesting is the total crypto market value. When you look at the D, the double top that corresponds to D up here, it looks most like Ethereum and Cardano rather than looking like Bitcoin, whereas everything else outside of that double top, it looks mostly like Bitcoin. So right here, we can see each of the stock indices, again, broken down A, B, C, D, E. Obviously, the New York Stock Exchange, the NASDAQ, and the SPX are going to look more like each other than the Bitcoin and crypto auctions I went over. But I mean, if we do compare these, we look here specifically at Bitcoin, the CMV, and the SPX. We can see how it also, like especially with respect to A and C, these lows happened pretty much right on top of each other. And these are overlaid to match up, as they clearly do match up. Right now, obviously, the stock market and Bitcoin and cryptocurrency more broadly are correlated in that when they're going up, they're typically going up roughly in unison, and when they go down, they're going roughly in unison. But recently, we've started to see some daily decoupling, not really necessarily higher time frame decoupling, but kind of a daily medium term decoupling. And as I've been saying on this channel for quite some time, I believe that heading into the next bull market, especially into the upcoming bear market of the phase 2 of the cycle 3 that we're on, we're going to start to see the degree of the decoupling intensify, where we'll see decoupling for longer periods of time than we have so far, as it seems to kind of be just beginning, especially with the whole CBDC thing and the fact that eventually blockchain solutions, Bitcoin, etc., as it has been made to do, should take out our current financial economic system and replace it with blockchain integration. Therefore, a lot of these old functionalities are going to die out, or they're going to find their new version, evolution within the some sort of blockchain protocol or something like that. But yeah, again, I just want to emphasize, like, all of these look the same. Like, it's kind of, I just still, like, to this day, it's something that's kind of amazes me. I mean, a lot of people think that the market's just something that's so difficult, but really it's not. I mean, it's almost like, I in my mind personally think about it as like, it's almost akin to like when you're in preschool and you're playing that little like wooden game, and you have a triangle, you have a circle, and you have a rectangle, and you have to fit it in the right slots. It's just like a geometry game. Like, can you notice this pattern? Can you match it up? Etc., etc. I mean, that kind of goes into the whole phase cycle theory that I was going on earlier in this video. But again, that was all that I wanted to touch on in this video. So hopefully you guys enjoyed. Hopefully my rambling wasn't completely unbearable in this video. And hopefully you're able to take away things from this video in an educational sense. But all that being said, and everything gone over, we should be expecting a bull market, right? No, I'm just kidding. No, it's it could totally plummet down to $0 tomorrow. Anyways, hope everyone has a blessed day.